Now that we're into the second week of November, the forecasts for the housing market in 2022 are starting to come out. But what exactly does it mean for you if you're in the market to buy or sell a home? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And if you happen to see the video I put out last week, I talked all about the potential of a housing market crash in 2022 and went through all the reasons why it doesn't look as though there is going to be a crash. I've got a link for that in the description right below. So you might want to go ahead and check that one out if you haven't seen it already. And, the real estate markets lately have been a little bit confusing. There's a lot of information out there that leaves you up in the air. You're not really sure what to do, where to go. Is now a good time to buy? Is now a good time to sell? Are we at the peak? Are home prices coming down? Where does all of this fall out? And the truth is everyone's got an opinion and nobody knows exactly for sure. And what I try and do in these updates for you each and every week is to provide you the facts, give you the data, share the latest information as it becomes available so that you can make the decision that's best for you and your family at this time. And in this week's video, we're going to focus in on two things, and they're two key players in the real estate market. And the one is interest rates, specifically mortgage rates. And as you know, those have been going up. And that's not necessarily a bad thing. I'll explain that in just a moment. And the other thing is we're going to look at home prices. I mean, it's been the talk. Home prices have escalated rapidly over the past 18 months. So we're going to take a look at that, and I'll share with you the latest forecast for next year. So I'll go ahead and share my screen. Right, so I'm going to start here with this quote from Doug Duncan, who's the chief economist and senior vice president at Fannie Mae. And he says, right now, we forecast mortgage rates to average 3.3% in 2022, which, though slightly higher than 2020 and 2021 by historical standards, they remain extremely low, and they support mortgage demand and affordability. You may recall from a couple of weeks ago, when you take what Fannie Mae has to say and the Mortgage Bankers Association and Freddie Mac, and you average all of those together, the consensus seems to be that about this time next year, we'll be looking at mortgage rates of about 3.5%. So not overly high by historical standards, but still higher than what we've seen. And I'll share that with you here to give you an idea from a historical perspective. So this is looking at mortgage rates going all the way back to January 2018 until today. Okay, so you can see in part of 2018, we jumped up right here to almost 5%. And then mortgage rates did that big drop. And at the beginning of the year is when we hit our all-time low, right in the region of around 2.65%. And you can see they bounced up, they've come back down, and now they're moving back up again. But I just mentioned, increasing mortgage rates are not necessarily a bad thing, because one of the things home buyers have been faced with over the past several months, most of this year actually, is soaring home prices, bidding wars, multiple offers, new home builders that have wait lists as long as my arm trying to get in on properties. And it's been a supply and demand issue, which has caused home prices to soar. Great news if you're a seller that is planning on selling and not buying another property, but not so great news for everybody else, because it keeps pushing those prices higher and higher and higher. And there comes a point in time where they just can't keep going up. And mortgage rates have helped to keep affordability at bay, but we're running out of room there. So as mortgage rates goes up, it will have a bit of an impact on demand, and it will start to slow home price appreciation. And as I just mentioned, that will be a good thing for everyone. except the person that's going to be selling and just cashing out, and they're not in the market for another home. So when we look at home price appreciation, where are we? Right? I mean, it's been fairly consistent across the country. Some markets have done better than others or appreciated faster, but there are a couple of interesting trends that emerge. So I'm going to focus in on the two markets where we work most specifically. So here in this first graph, I'm looking at Frisco and Prosper, Texas. Okay, so as you can see here, this is going all the way back to 2018. The price appreciations I'm showing, although going up, was at a fairly controlled pace in both areas until right here. This represents the beginning of 2021. And you can see what happened. We had these massive spikes. That is kind of the time frame when demand and supply hit the crux, right? I mean, we weren't seeing multiple offers and bidding wars until about February of this year in the Frisco and Prosper markets. And what happened is between January and March, April is when the prices really shot up. This represents April right here. So since April, the price appreciation, it's still appreciating, but it has not been at the same pace that we saw all the way through here. This right here is Frisco, and this is Prosper. But still, nevertheless, year over year, 29% year over year median home price appreciation in Prosper and 27.3% in Frisco. Those numbers have come down. Again, this is showing year over year. But if we start looking at this trend line here and here, you can see that that pace of appreciation is already starting to moderate. All right, now, similar to this, Southern California, where my team also operates, Temecula, Murrieta, a little bit of a different pattern here. But the one thing I will point out, if you look at the year over year pace of appreciation, fairly similar, 27.8% year over year in Temecula, 23.2% in Murrieta, which is obviously ridiculously strong appreciation, and we cannot keep appreciating at that rate. But here's the difference I do want to point out. If you look here, the trend lines in Southern California was pretty standard until the beginning of 2020. Since the beginning of 2020, where the Southern California market has differed from the North Texas market, is that trend line has just nonstop. It's just been going up, 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 and up. Okay, we didn't see that, if you recall, in the North Texas market until right here in 2021. I guess that's when the bulk of all the Californians were moving to North Texas. But anyway, you're not seeing that. I mean, it's just right now continuing on extremely strong pace of appreciation. You did see a couple of dips in here, which is an indication that there is some cooling. We are seeing some cooling in that market as well, albeit it's not as pronounced as what we have seen over the last few months in the North Texas market. So where does that leave us for 2022? Well, the latest forecasts have just come out, and here they are. Now, this is looking at Fannie Mae, Freddie Mac, the Mortgage Bankers Association, the Home Price Expectation Survey, Zelman and Associates, and the National Association of Realtors. So you can see that these home price forecasts for 2022 are nothing like the 23 to 29% that we experienced or have experienced year over year to date. As a matter of fact, the highest appreciation forecast is Fannie Mae at 7.4%. And the average of all of those forecasts is 5.1. And, what I'm expecting to see personally here in North Texas and in Southern California is I do think our pace of appreciation will beat the 5.1 forecast here. They're just slightly stronger markets than what we're experiencing in some other areas of the country. But I do think the pace of appreciation is going to continue to come down. You've heard comments or possibly heard comments over the recent weeks of decelerating price appreciation. That, again, can be a confusing term. Makes a lot of people think that it's reversing course. It's not. they're just basically saying that the pace of appreciation is not going to be as strong or as high as it has been over the last 12 to 18 months. In both cases, the markets remain strong. My business associate partner in Phoenix is still reporting the same thing, as well as people I'm talking to in Florida, most of the East Coast, even up in Minnesota, in the areas that are usually see more of a seasonal slowdown at this time of year. So overall, it looks as though the market's going to stay strong. I do think we're going to see some changes. I do think we're going to see a little bit more inventory come on. And again, that pace of appreciation is definitely going to slow down. So in conclusion, here's what Mike Fratantoni, I'm sure I butchered his name there, but he's the chief economist and senior vice president for the Mortgage Bankers Association. And he's saying that 2022 should be another strong year for the housing market. And that's what we're seeing ourselves. Now, if you want to keep up to date, and I put out a new video like this at least once a week, go ahead and hit the subscribe button on this channel and the little notification bell, the bell icon there. That will notify you when I put a new video out, and you can check back to the channel often. As soon as information comes out, I turn that into a video so that you can have the information that you need to make the decision that's right for you and your family. If you have any questions in the meantime, please don't hesitate to reach out. You can call me at 888-447-9650.